Is it possible that printing money for years and years has actually created the crisis that we're in today? Well, I'm about to show you some wild information that is going to reveal what we're dealing with right now at this time. Here we go. If you stick with me through this video, I'm going to show you why one bank is amassing up to $50 billion in cash in order to deploy into real estate and why they're doing it. So you definitely don't want to miss it. Beginning with this one here, historic correction grips Canada's housing market, according to RBC. Bank expects housing prices to decrease 12% from previous peak. Now they specifically mentioned 14% for Vancouver and Toronto, but I think we get the point here. This is coming from a very high number. So 12% isn't that significant, but certainly it's bigger than what happened through 2008 and what happened before that. And I believe it's 40 years. Haven't seen anything like it. So we do see that when you get things that are entirely out of whack, they have to come back down to reality to some degree. Home sales are expected to fall 42% from early 2021. You can't keep pushing up the sales over and over again. And of course, if inventory is going up, if inflation as well as interest rates are going up, it's going to slow down the market. That is expected. Apartment and warehouse deals start to sputter as rates sting. So just like what we see with residential real estate, many factors there are popping up in this case here. And looking at warehouses specifically, because even Amazon, the behemoth, actually stopped. I believe it was with their warehouses. They were going to do a whole bunch of them and actually have slowed down on those. With prices heading down and sales falling through, it feels like a Wile E. Coyote moment for the U.S. commercial property market. And I've used the Wile E. Coyote description before because you go over the cliff and then you don't realize it yet. And that, in some cases, seems like where we are at today, doesn't it? Look at it. You could see here, all the other signals tell you there should be some sort of change ahead. And they specifically mentioned that it's a drop in prices. There are already signs of a decline. U.S. commercial property prices sagged 5% in the second quarter and may drop as much as 5% more this year. Okay, these are small numbers, right? This is just the beginning, of course. This is nothing when you really think about it. 5%, 10%, 15%, whatever it is. What we need to see in order to get a massive crash is inventory piling up like crazy because people are not spending money. And we know what we learned from 2020 was if you want to get people to spend money, well, then you have to drop interest rates down to rock bottom. You have to send people stimulus checks and you have to give companies all kinds of different loans that they don't need to actually pay back. So that's part of it, of course. Look at this. The one bank that is amassing here 30 billion, but actually when you look at the global number, it is $50 billion. Blackstone. They put the finishing touches on a record real estate vehicle. Latest iteration of main real estate fund is expected to total $30 billion when it is finalized. So they're raking in the cash, they're getting it already, and they're waiting. And they're going to deploy $50 billion worth in this one fund. Who knows, they might get more, to buy up real estate. And they're going to wait, and they're going to wait for the right time, of course, and they're going to be picking up real estate. Are they going to be, buying single family and all that? I guess that remains to be seen. But a lot of times what these big companies do is they buy multifamily property. So they're buying places that have 300 units, 1,000 units, anything in between there. And it costs a lot of money, hundreds of millions of dollars in some of these cases here. And they have management in place there and they take care of it. And while, it's not crazy in terms of the amount of appreciation necessarily, it could be, but they're just there for the steady capital flows, cash flow. That's what they want, and that's what they are ready to put their cash into. I believe that they are waiting for a better opportunity to buy in. They want to get the capital from people, but they want to deploy at the right moment. So we will see what happens here. Commercial property works a little bit different than residential, but the principles still apply. Look at this. if you see what's happening with manufacturing, I hope you can see that right there. The blue line, that's your PMI business activity, okay? And then we have the green line, and that's manufacturing PMI, and that had actually dipped down, both dipped, but when you look at manufacturing, it actually was in a contraction. Anything below 50 is considered to be a contraction. So that right there is a worrying sign that we're starting to see everything in the data show up. This is giving us, I have Europe as well as US looking at it. S&P showing us, the S&P Global Flash US PMI Composite Output Index. There's so many different indexes, so many different stats and everything. All you need to know is that multiple factors here for the US and Europe are showing us to be in a contraction, which goes along with what we've seen with recession on the table right now. So we're going to get that information coming out at some point. And here you have the same sort of situation. Eurozone PMI Composite Output Index, it's at 49.4. Manufacturing Output Index, 46. So both of those, again, below 50. Below 50, it's a contraction. Not a good sign, okay? If you appreciate this information, hit that thumbs up button. Don't forget to subscribe to the channel, okay? Consumer confidence drops as inflation squeezes US shoppers. So I think it's important to look at that because what the consumer is doing is going to be largely reflected in the economic stats. So, there's a delay and it's not exactly going to show up tomorrow, but it's there. And that's what I do on a daily basis. I show you all the data and it looks very clear. Mall visits have dropped 14%. So while I do see people out there saying, you know what, that's not happening. I go to the mall, I drive down the street, I'm seeing the people buy. Yes, but when we look at the actual data on a national level, and maybe I've seen state level and so on, you just see the same kind of thing. Credit card usage is up, the savings are down, and of course, you look at what people are actually spending their money on. Yeah, they might be spending money, but they're spending it on gasoline, they're spending it on food, they're not spending it on, frivolous things and so on. I mean, to the degree they were a few years ago anyway. This gets into a couple different examples, just showing us about what's happening within the economy, within business. And here we have it. Business at the Pennsylvania art industry firm where this individual had worked had been brisk until a few months ago. But lately, jitters about the crashing stock market, possible recession, had many regulars tapping the brakes on new purchases. Over the last 3 months, sales have dropped 50% and then 50% again until they were basically at zero. Most of our clients were in real estate or tech, and they've just disappeared. They don't want to spend $10,000 on a painting if they're worried things are going to crash in a few months. So I thought that was interesting because it shows us not only what's happening with this particular industry at this level. $10,000 paintings are a lot different than a $10 million painting, but still you're seeing that. And in addition, they're just talking about 7-Eleven cutting corporate workers, Ford cutting workers, Rivian's cutting workers, and so on. Okay, so different companies have been cutting workers, and we're seeing that across all industries. This is the first round, or maybe second round, depending on some companies, of cuts. So it's still minimal at this point, but we need to pay attention to it because if interest rates remain high for a period, it's going to have detrimental effects. There's no doubt about it. After a decade of feeling invincible, the tech industry is suddenly facing something new. Financial insecurity, valuations are down, layoffs are up. Startup funding no longer seems limitless, and an air of fear has started to permeate in the sector as bosses and workers alike adjust to the harsher version of reality. Okay, and they just get on with that and real estate and so on. I just think that if we watch the fringe of any market, the fringe of real estate and the fringe of business and so on, we start to realize what could potentially occur, a domino effect that makes it our way. And ultimately, what we have to be aware of is if we do not have a secondary source of income, I think, those people could be in a world of hurt unless what they do is so valuable that it just can't be replaced, at least for the foreseeable future. Now, you look at that, I mean, just look at healthcare workers. These were indispensable type of workers. And in 2020, a lot of them were kicked to the curb. So you know, that, what can I say? Okay. And then this, my friends in Australia, I got one for you. It's actually good. Australia launches review of, quote, embarrassing central bank. Now, you will never hear about that with the Federal Reserve in the US. It's just not going to happen. But I give kudos at least for saying this. In Australia, RBA was criticized for maintaining low interest rates as inflation climbed. Okay. Looking at this, and I believe we have the quote right here, we face a complex and changing economic environment, and now is the right time to ensure that we've got the world's best, the world's most effective central bank. I think so. Do you think so? So essentially they say, look, we didn't get it right. The timing was way off. We said inflation would be transitory, and oh no, we didn't react on time. Okay, so they're talking about, making changes. Maybe this is going to have a big effect on the central bank and this and that. I don't know. I don't know if they're ever going to do anything, but literally just hearing those words is amazing. Okay. And you see right here, Philip Lowe, RBA governor, admitted in May that the central bank's forecasting had been embarrassing, given that it had indicated that it would keep rates as low as possible until 2024. The Federal Reserve did that. The Bank of Canada did that. All of them did that. Okay, well, they all did it. But you're actually hearing it in Australia. I mean, this is great just to hear for someone like me that tracks and traces all this data every single day. Do you agree with me? Hit that thumbs up button, all right? You support the channel when you do so. All of this information here condensed down to these daily videos is really, truly important. And I think people should be paying attention. I think you should watch out with what's happening in the economy, and you can make better decisions. Simple things I talk about all the time. I've got a playlist called How To and Solutions, which I reference very often, that have some stuff there for people who haven't read my books. And, get a skill that, in addition to your own skill, let's say, I don't know, whatever it is, you work somewhere, you should have something else too, okay? You always want something to create a secondary income source for you. So I think that's really key. If you found it informative, hit that thumbs up. And don't forget, you got to subscribe. You got to hit that follow. You got to do what you can to basically get this into your feed consistently. And this information is something that I bring to you on a daily basis. So I'll see you on the next one. Take care.